turn it around.
It's Down to Business with Jack Miller. Forget what they teach you in school. This is real life. Not Wall Street, but Main Street. A real show on what's really involved with starting and running a business, with all the ups and downs. Our guests will answer your questions and provide you with valuable information. Stay tuned and join in the conversation. Call us at 305-541-2350. Follow us on Facebook at Jack Miller Down to Business or on Twitter at HJackMiller1.
Thanks, everyone. Thanks for sticking with us. Brad, thanks for sticking with us. My man Todd Cohen is here of Commercial Corner, Marcus and Millichap. Brad, a couple questions for you. What REITs are you comfortable giving us some recommendations? What REITs you recommending now?
Sure. Well, that's easy. I'll go back to an article yesterday which got about 18,000 page views and 180 comments, and I was up till midnight answering them. So pretty popular subject was Stag Industrial, S-T-A-G, Industrial. Stag is a Boston-based, really warehouse REIT, or industrial REIT, but that primarily warehouses they own really throughout the country. And so what happened with Stag, the story is it's the company listed a couple years ago, so they've been around 3 or 4 years, after the recession. They've been buying up, warehouses across the country in kind of A and B markets, and they've done really well. But last week they had an analyst recommend a sell on the company, and so shares started to sell off, and they had their earnings earlier this week, which was really a non-event, but it kind of spooked the market. And so I went into great detail in this article. You can read it on Seeking Alpha, but the shares really pulled down quite considerably in a day, and really created that margin of safety that we were talking about earlier. So Stag haven't checked today, but they're trading around their dividend yield is over 7%. And I don't want to quote the share price because I haven't really looked at it, but you're definitely trading at a discount. So I like Stag a lot. It's a great management team. These are fairly midterm leases. I mean, these warehouses, they're not long term. They're around 5 to 6 year leases. But they're trading on some weakness. So those are the kind of companies I like recommending where you really have that margin of safety. The other one I like in the healthcare space is Omega Healthcare Investors, ticker symbol OHI. Omega has been paying and increasing dividends every year for the last at least 10 years. And actually in the last 13 quarters in a row, they've increased their dividend by around 1%. So they've created a very, very stable and predictable income stream. They're the largest skilled nursing landlord or REIT in the country. They just merged with another company in the first quarter called Aviv. And so about a $10 billion company with a very stable income stream. And again, I don't know the yield today, but it's in the probably low 6 number. So those are probably two of my favorite today. Again, looking at valuation.
Gotcha. What do you think of Kimco? I actually bought it because of you. A few years ago, you wrote a few articles about it.
Yeah, I like Kimco a lot, and of course, I like the management team a lot. Dave Henry, who's going to retire soon, is the CEO, and Milton Cooper, the co-founder's son, is grandson actually is now going to be taken over as a CEO. Younger guy, but he's experienced and certainly has the bloodline. But Kimco, they went through a tough time, like most shopping center REITs did in the recession. They did it. They were forced to cut their dividend, but remember, Lehman Brothers went out of business too. So it's not just the REIT sector. But when you look at Kimco, I mean, they are the largest shopping center landlord in the country. They've really, over the years, again, going back to the recession, they've really deleveraged the company. They sold off a lot of non-core assets. They used to own some extended stay hotels and a number of other properties in some, secondary or tertiary markets. So they've got a really high-quality portfolio today, and I think that's really what I look at. They do have a really vetted management team. And again, Milton Cooper's still there. When I'm in New York, I always try to run by his office, shake his hand. He's founder of the company and still a major shareholder. But yeah, Kimco's a good business. And again, the retail sectors, had some concerns. But Kimco does have a lot of these necessity-based tenants that are not going to be threatened by Amazon. And I think that's really what you have to look for today in the shopping center space.
How do you differentiate Kimco with, say, an Equity One?
Well, again, management, number one. I mean, I think hands down, Kimco's got one of the best management teams in the country. Equity One's got a fairly new CEO. They haven't been as much stable. Their management team has not been as stable as I would like. They've also sold off a lot of their non-core properties as well. In fact, when I was a developer, this is going way back, I bought a center from them. I'm very familiar with Equity One. But again, I think you've got just better quality with Kimco overall. And I just think that Kimco is really more aligned with the individual investors. I mean, I've spent a lot of time with the management team at Kimco. I think a couple other shopping center REITs that I like, Weingarten, ticker WRI, based down in Houston, Texas. They're kind of very similar to Kimco in terms of their quality management and their portfolio. They do have a lot of grocery product in that as well. And then, probably on the West Coast is Retail Opportunity Investment Corporation. Their earnings, they just reported earnings yesterday, but they primarily operate on the 3 states out west: California, Oregon, and Washington. And again, that's probably the best real estate to own in the country if you want access to that market. And they've done very, very well as well. But you really have to spend time on the shopping center space. Again, I think a lot of the issues kind of stem from from the threat with the internet. The mall space is having a probably even a greater time, and obviously having to deal with the Sears and the J.C. Penney's of the world. And so in the mall space, I really look for just the A-quality malls like those that are owned by Taubman, which I'm a shareholder in, or Simon Properties, which just reported earnings this week and that has done extremely well. And then kind of moving down that, I like the factory outlet space, which is Tanger Factory Outlets, a very stable and reliable sector.
So for our vast listener base out there, if any of them were looking to invest in the REIT market right now, what would be like the top 3 recommendations you would make for the average?
Individual stocks or sectors? I'm sorry.
No, not in terms of individual stocks, but in terms of preparation, what they should do, due diligence, what to invest in.
Brad, I don't mean to interrupt. We have like a minute left, so if you could be quick with this, I apologize.
Sure. I would say visit my website. I've got a lot of research on my website. We just relaunched the brand. I have a lot of articles there. Not only my articles, but just read a lot of this about REIT sector. But I definitely think that you've got a lot to pick from today, but you've got to be careful today. And I tell people anywhere from 10 to 20 to 30%, and that's the high end of your portfolio, should be in REITs. And again, everybody's got their own risk tolerance levels. But again, you've got diversification, liquidity, and transparency, and those are the key reasons you're investing in those stocks.
Great. And one last question, just for people who don't know, can you explain what Seeking Alpha actually means, please?
Sure. Seeking Alpha is a website, so it's been around a number of years, and I've got 18,000 followers there, so it's been around a while. But it's really been a great site for the young and old, and it's basically any public stock you can find and put the ticker symbol in. You can find up-to-date current research on that company.
And they have a great iPhone app. I get it. Todd, do me a favor, Todd. Give your contact information. We got to go in like 30 seconds.
All right. Todd Cohen. You can reach me at 786-522-7021. You can also find me on the Marcus and Millichap website. And thank you all for listening, as always. And thank you, Jack. And thank you, Brad.
Brad, I really appreciate it. You are a fascinating and interesting guest. I know how busy you are. And by the way, I love the launch of iREIT. Investors.com. I was playing with it last night in bed, and I love it. Thank you for joining us. I can't wait till your book comes out. Super exciting. Everyone buy REITs and follow Todd. Follow Brad. You can follow Todd, too. You can actually follow me, too. This is Jack Miller, Down to Business. Remember, next week we have Sidney Powell talking about the criminal justice system. And Brad and Todd, thank you again. Thank you, Wanda. Thank you, world. Have a